So on behalf of good afternoon to all. On behalf of Bombay Chamber of Commerce and Bombay Chamber of Commerce tax panel, I welcome the esteemed panelists, Mr. Shrenik Shah and Mr. Amit Sarkar, as well as all the participants who have logged in to address this session, this webinar on the expanding scope of e-invoicing, and why is it important for you, or why is it important to each one of us, be it in manufacturing industry, service industry, or basically every taxpayer. Now, all of you would be aware that by a recent notification, the threshold limit for e-invoicing has been considerably reduced. It had started off with 50 crores, then it went down to, I think, 40 crores. And now the latest threshold limit is that for anyone who has achieved aggregate turnover, that is at PAN level turnover, not just one state, PAN level turnover in any of the financial years after 1/7/2017, in any of the years, will be eligible or to come under e-invoicing net from 1st April 2022. So which means supposing a person had a turnover of 15 lakhs in 2017-18, but 25 lakhs in 18-19, and again later on he fell to 5 lakhs or whatever before, but still because in one of these years he went above 20 lakhs, from 1/4/2022 he has to observe the e-invoicing mandate. So this has thrown the net wide open to encompass almost a very large section of taxpayers, and hence I think this webinar, which has been organized by Bombay Chamber of Commerce, has not come a day too soon, because the title, why is it important for you, it's now important for almost everyone, because a very large section of the taxpayers would now be covered with this reduced threshold limit. And there are various contours to this, which the panelists will take you through. And I would just introduce the panelists. Mr. Shrenik Shah from Deloitte has been in this field for at least 16 years in the indirect tax domain only. I have had the good fortune of working with him also as his client at a point of time. So I know him personally. And Mr. Amit Sarkar is also a partner in Deloitte with more than 25 years experience in the field of indirect taxes, particularly GST, customs, FTAP, etc. So with these words and having introduced the panelists, I would like to throw it open to them to address the audience, and the audience would also get chances at appropriate time to ask questions, which the moderator would flag off, which from Bombay Chamber, which I believe would be Ganesh. So with that, over to you, Mr. Sarkar and Mr. Shah.
Thank you, Mr. Roy, and good afternoon. I'm pleased to meet you for the first time, Mr. Roy.
Yeah, we haven't met, though I have met Shrenik many times.
Yeah. Okay, thanks for your introduction, and we will start with the presentation right away. We will cover the areas and contours, as Mr. Roy mentioned, regarding the aspects of e-invoicing and how it importantly impacts the way of doing business for every business that we can possibly think. So let us take a step back and look at how GST compliance has evolved over the last 5 years. Prior to GST, we never had the concept of a transaction level reporting for indirect taxes. And it was for the first time that GST introduced the concept of transaction level reporting by virtue of filing an outward supply return, which eventually turned into an input tax statement, or a GSTR 2A as we popularly know about it. Now, one more aspect which came, which was again had a legacy in the previous system of waybills and road permits, is in the case of electronic waybills, and that we saw coming in after about 2 years of journey into GST. Going forward, we saw the advent of e-invoicing starting in October 2020, where certain companies above a certain threshold were brought in the ambit of e-invoicing. And e-invoicing did not mean that we need to have electronic invoicing system from our systems, but more so have a government authentication on the transactions that a business is used to do. Now, again, moving forward, we have also seen the use of technology in terms of restricting credit in the hands of the recipient by virtue of various statements, and presently the statement which is in vogue is the Gstr 2B statement. And all of you would be aware that in the budget of 2022, the government has spoken about further restrictions of qualifying the Gstr 2B to restrict it in the hands of the recipient, and we will cover that at a later point in time. So overall, if we look at this journey, it is more about real-time compliances right from the origination of transactions, and e-waybill and electronic and e-invoicing have actually bolstered that real-time compliance reporting right from the origin of transactions. And what has been the cornerstone for bringing this significant changes which the government brought in the compliance system? The core philosophy has been that the government wanted to collect taxes on a real time, on a basis which would cut down evasion, cut down frauds, and also result in robust collections in the hands of the government. At the same time, it would also have a lot of emphasis on dealing with ethical transaction originators, and consequently bring in overall level of compliance and ethics in the taxation system. But if you again review the entire process, it is not only managing tax compliances, it is also managing the transaction level and the transaction origins, which impacts not only your working capital but also impacts your supply chain in some way or the other, because we are talking about documents which originate with the transactions when the goods are moving across states or moving within the state. And again, for service companies, it also impacts because it is not only merely issuing an invoice at the end of the month, but also accompanying it with the government authentication of those invoices. So we have seen an extensive use of all these, extensive use of technology in as far as government's efforts to bring in the compliance domain of GST. And in addition to that, it has helped government to introduce additional power-backed artificial intelligence or machine learning technologies to detect fraud, detect evasion, and also manage their tax compliance in a more efficient manner. So this is the background of e-invoicing, and this is what we are looking at. Now, from here, we will go to the next slide, and I would invite my colleague Shrenik to come in and take us through the GST compliance process in a whole and how e-invoicing is going to impact it in a manner.
Thanks, Amit, and hello everyone. Good afternoon. As Amit explained, the government has been emphasizing a lot on use of technology for compliances and real-time reporting. All of you would be aware about the GST returns and the compliance process. Just to do a quick touch up on this, essentially the first three returns, which is GSTR 1 filed for outward supply, is something which is absolutely essential for everybody. And then there comes a requirement to do a reconciliation with GSTR 2A and GSTR 2B. While GSTR 1 was the statement which was referred to earlier, now GSTR 2B has been made mandatory. And then there's a lot of activity around reconciliation of input tax credit and purchase register with what is reported by the vendors in their GSTR 1, which flows into your GSTR 2A or 2B. And finally, to end the cycle, there's a GSTR 3B, which is required to be filed on a periodical basis, which is basically a summary return containing details of your inward supply and outward supply, and the tax liability is determined on the basis of numbers which are reported in GSTR 3B. And there are the ancillary returns which are required to be filed depending on the option that you selected. For example, GSTR 6 or 6A, which is for input service distribution. You may have a GSTR 7, which is for TDS by the government entity, which may not apply to most of the participants on this call. And there's GSTR 8, which is applicable to e-commerce suppliers, right? And ITC 04 again is a job work return. So if you see, essentially the first three boxes, which are quite important and relevant, whether you're complying with the invoicing right now, or you will be a taxpayer which is required to comply with invoicing in future from 1st of April 2022. Now, what does it mean? It means that there is going to be a touch point to the government on an early basis. If you're a taxpayer which falls into the category of 20 to 50 crores for the purpose of e-invoicing, till now, your first connect point with the government for the purpose of reporting was filing of Gstr 1, which would happen on 11th of the next month. Now, going forward, when you are eligible for e-invoicing, the transaction needs to be shared with the government before you raise it or before you share it with your customers, right? So the government will get to know about your transaction even before your customer knows that you're going to raise an invoice with them. That's very important. And you can expect queries and questions from the government as you move along on the transaction that you report to them. Second point, which is more important, is that there's going to be a requirement for carrying out reconciliation between your Gstr 1 and the e-invoice data that you reported. There are likely to be differences because of, let's say, B2C transactions or any other reason where you will have to carry out a reconciliation and then match your Gstr 1 with what you reported for e-invoicing. A major change in the process going forward will be, again, your returns will be auto-drafted. So based on the e-invoicing data that you report, your Gstr 3B will be auto-drafted. Your Gstr 1 will also be auto-drafted. And similarly, based on your Gstr 2B, the Gstr 3B input tax credit will also be auto-drafted. So there's going to be a lot of efficiency in the process while you have to carry out reconciliation, but you will still have the returns auto-populated from the government portal. This will save a lot of efforts on the taxpayer side. And lastly, the important point here in the whole compliance process is there's a need for doing out various reconciliations. As I mentioned, you are doing some reconciliations today, but there's going to be a requirement to carry out more reconciliations as we go forward to ensure that what you're reporting to government as a part of e-invoicing is carried forward in your Gstr 1 as well as your Gstr 3B. And at the same time, what your vendors report in Gstr 1, it flows into your Gstr 2B for you to take input tax credit on those transactions. There are going to be multiple touch points for you to have the reporting with the government on a real-time basis going forward. Now,
thanks, Shrenik.
Yeah.
So I think just to maybe summarize what Shrenik highlighted, I think the important thing which we need to keep in mind is for transactions which were hitherto reported only once in a month by filing the Gstr 1, with e-invoicing, it starts right from the origination of the transaction, and therefore Gstr 1 filing is a mere compliance because the Gstr 1 gets auto-drafted by the portal today. So that's a very important point to note. And the second point is, even from an input tax standpoint, we are expected to get the flows from our vendors and suppliers again through this mechanism. And now with this reduction in the threshold of 220 CR, this is going to cover a large volume of our vendors going forward. And therefore, all these input tax statements are also expected to flow on an automatic basis or an auto-drafted basis. So that's I would say, the key summaries of the points which Shrenik took up. So having said that, let's highlight the key legislative portions and the typical e-invoicing flow that we are expected to follow from 1st of April for this category of taxpayers.
Right. So essentially, as we mentioned on the first slide, and then as Shouvik Roy mentioned in his opening remarks, the government has been constantly reducing the threshold for e-invoicing compliance requirements. This started with 500 crores initially in October 2020, and today we are just 15 days away from further lowering of the threshold to 20 crores from 1st of April 2022. Now, if you are a taxpayer who falls into this category between 20 to 50 crores, these are some of the points which are essential for you to note, and which will mean that if you're a taxable person covered under the specified category, which is within the threshold limit, you are required to comply with e-invoicing on a daily basis, as in when you raise invoices. And what e-invoicing means, it doesn't mean that the government is going to raise invoice for you. E-invoicing means that before you report a transaction to your customer, you have to report that particular transaction to the government. Now, how does it work? So Essentially, it means that you generate a transaction in your sales or billing system. You pass on the transactions to the government portal in a particular manner. The government portal validates those transactions, and for validated transaction, an e-invoice is generated. And if you ask me what are the areas which are covered as a part of e-invoicing, essentially it covers B2B supplies for domestic customers. It will also cover the export transactions. So if you have any of these transactions, you are required to comply with e-invoicing. B2C transactions are not covered as of now. And at the same time, for exempt supplies and for advances that you receive, you do not need to raise an e-invoice on your customer. At the same time, if you are a part of the specified industry, for example, banking and financial services, or goods or passenger transport service, or you are a unit in the SEZ, you're not required to comply with e-invoicing. Having said that, once you're covered as a part of the invoicing mechanism, any invoice that you raise or any debit or a credit note that you raise for the eligible transactions have to necessarily go to the government portal first before you can share it with the customer. Now, why this is important? Because for taking input tax credit by the customer, an e-invoice is a mandatory or a valid document. If an invoice issued by a taxpayer who's eligible for invoicing but does not go through the invoicing mechanism, could have an implication on the input tax credit to the recipient. Now, this would apply to you not just as a supplier when you comply with the invoicing requirement, it will also apply to you when you accept or when you purchase goods or services from your vendors. You need to necessarily validate whether those invoices are complying with the invoicing requirements or not. You also need to see whether the vendor actually falls into the 20 crore to 50 crore cap threshold, and are they complying with invoicing requirements or not. And while this is the basic legal requirement, what it entails is that, number one, there are changes required in the IT and the billing system, because the government has specified a set of fields which are required to be passed on to the government portal for the purpose of carrying out e-invoicing. It's called schema in the legal terms. So you have to see whether the fields in your ERP or billing system, do they match with the schema which is published by the government? If not, you need to make changes to the ERP system or the billing system to make those fields available, or to make changes in the specification of the fields. At the same time, you need to have a capacity and capability to transfer the data to the government portal on a real-time basis. You probably may do it either directly by logging onto the government portal. The government has provided a facility of having an Excel templates upload, or you can use a service provider who can help you to fetch data from your ERP, do the validations, pass on the data to the government portal for carrying out e-invoicing. So this is what the basic legal requirements cover. Now, you may have a question as to how e-invoicing will work in practice. So this chart will exactly show you how the whole flow of e-invoicing works. As you see on the left side, there's an information which is fed into the ERP or the billing system or the dealer management system. Once you fed this information, it becomes a transaction. Now, the transaction needs to be extracted and transformed and shared with the government portal. Now, as I mentioned earlier, there are two options available. One is that you directly upload these details onto the government portal here, or you can have an intermediary solution, which is typically called as a GST Suvidha provider, who can help you to connect your system with the government portal for carrying out e-invoicing. Now, if we proceed with the second option, which is you having an intermediary solution for carrying out the compliances for e-invoicing, you may probably have three mechanisms, whether it's a web-based transfer, or if you are technologically advanced, you can have an API or a SFTP, which is folder-based transfer of data to the government portal. Now, when you come to an e-invoicing solution, what happens here? So there are two types of activities which happen typically for e-invoicing purposes. One is that the data is passed on to the solution. The solution will validate whether the transaction and the details that you share with it are appropriate or not, whether it complies with the legal requirement. For example, let's say you send a B2C transaction. The B2C transaction is not eligible for invoicing, and hence the solution should ideally reject the transaction. Otherwise, it will unnecessarily go to the government portal. Similarly, if there are any company-specific validation which are there, the solution can also take care of those validation to ensure that you adopt the right and correct tax position, which is also reflected in the transaction that you pass on to the government. And once that is done, the data gets transitioned to the NIC portal. NIC is the agency which is carrying out e-invoicing on behalf of the government. So once you transfer the data, NIC validates the data, and if it finds that the transaction is passing on all the validation tests, what it will do is that 3 activities. Number 1, it will generate a e-invoice for each validated transaction. Now, this e-invoice becomes a valid document or a valid transaction for taking input tax credit. It also becomes a valid invoice for you. Same way, it will also generate a unique invoice reference number, or IRN as we call it. And IRN becomes a reference point for future invoicing purposes. And the NIC also generates a QR code for each such validated transaction. Now, the legal requirement is that the QR code is required to be embedded on the e-invoice that you send to your customer. That's a mandatory requirement. So now, once you have these 3 things, again, 2 options, and you can have these details directly from the NIC portal. Second alternative is that you have this intermediary solution which fetches the details on your behalf, and then it passes it back to you for feeding back into your ERP system. Now, this is how the whole flow works. And then you can ingest those details into your ERP and billing system, and then print invoice and share with your customer. So this depicts the whole flow. And essentially, as I mentioned earlier, the transactions need to be first reported to the government portal, and only after that you can share it with the customer. While it looks a bit lengthy process, but in practice, it's fairly simple, streamlined, and smooth process. And the government portals are fairly responsive. So if your details of transaction are valid and they are accurate, you should get your e-invoice generated within less than 10 seconds for each of the transactions. So that's how efficient the government system is.
Thanks, Shrenik. So again, as the key summaries that we can draw from those 2 slides which we just saw regarding the process flow and as well as the legal requirements, I think the first is the determination of threshold, because now we are talking about a threshold of 20 crores and above. As you know that 50 crores and above were already in the e-invoicing ambit. The most important part is Mr. Roy outlined in his opening speech that in any of the previous 4.5 or close to 5 years, if the annual GST turnover or the aggregate turnover as defined in the CGST Act has crossed 20 CR, in those cases, those taxpayers will come into the ambit of e-invoicing from 1st of April. So that's a very important point to move forward and start our journey. The second point is, once we are in that threshold, or we are crossing the threshold, any invoice that we issue has to have a e-invoice, IRN, and a QR code. And without those, by provisions of the GST law, we would be rendering ourselves non-compliant. And more importantly, our invoices will cease to be a valid tax invoice for doing a tax transaction. So therefore, first step, one has to determine whether they are covered by law, and that can also be checked from the NIC portal whether e-invoicing has been enabled for a particular business or not. And secondly, once it has been enabled, we have to make preparations to comply with the e-invoicing regulations from 1st of April, right from the very first invoice from 1st of April. So that's the important takeaways for us from these 2 slides. Moving ahead, I would request Shrenik now to take us through how does the e-invoicing requirement impact the business as a whole, and more so, not only for the businesses which are going to come under the ambit of e-invoicing now, but also for those businesses who have a large distribution chain or a distribution chain to take care of. So Shrenik, if you can take us through that in terms of the specific business impact and also the impact from a distribution chain perspective.
Sure, Amit, that's a very important point, and we'd like to spend some time here. Because if you're feeling that you're a large enterprise and the reduction in the threshold of e-invoicing doesn't really impact you, that probably needs a validation. And that's exactly why we have this slide. So if you're a large enterprise, and I see lot many attendees from large enterprises, If you're a large enterprise, invoicing is going to impact you, and then you need to be careful about the implications. Uh, your trade partners who could come from this background of 20 to 50 crore will also be required to comply with e-invoicing going from 1st of April 2022. Now, these people could be either your dealer or distributor who help you to sell your products onward, or they could be your vendors from whom you purchase those goods and services. And it's likely and it's possible that many of these vendors or the dealers and distributors would come from an unorganized sector. And having said that, what it means is that there is typically going to be a lower IT preparedness or a technology readiness for this category of taxpayers. And let's assume that they are not compliant or they are delayed in compliance of e-invoicing requirements on their part. It will have a direct implication, not just on your input tax credit if your vendor fails to comply. It will also have a disrupting impact on your supply chain. Let's say, for example, your distributor or the dealer fails to comply. This is a very important aspect that the larger enterprise need to look at, because a slightest impact on the supply chain because of a non-compliant dealer, distributor, or a vendor could create havoc for your business. So that's why not just the 20 to 50 crore enterprises, but also all other enterprises are also required to be careful about e-invoicing. Now, if we come to the second category of taxpayers who's going to be facing e-invoicing, who's going to be complying with the e-invoicing for the first time from 1st April 2022. Again, I covered this earlier, but you will have to comply with the schema-related requirements, which means that one needs to see what all fields are available in the reports generated by your ERP system, which is what is required by the government for the purpose of compliance with e-invoicing. If there are any missing fields, or if there are any fields which are not as per the specification, you need to make changes to your IT and billing system. At the same time, there's going to be a real-time data transmission to the government portal. And this also means that, like earlier, where you used to have the government connect only at the time of filing of your returns, now this is going to be a daily affair for you, that you report the transaction. You can also expect more questions and notices from the government the moment the moment the transaction is reported to the government portal. So again, the impacts are going to be significant. For example, if you're not compliant with e-invoicing during this phase, which is starting from April, there could be an impact on your billing as well as your working capital. Because if you're not compliant, the invoice is not a valid e-invoice. Your customers would probably not be ready to make payment on those invoices. And this will also have an impact on the input tax credit of your customer. So it's not just a tax implication as such, it will also have an implication on your business relationship. And we've seen in our experience cases where the larger MNCs or larger companies typically do not want to carry out business with a vendor who is consistently non-compliant or who has an impact on their input tax credit. So from that perspective, again, to recap, whether you are a large enterprise or you are an enterprise falling into the category between 20 to 50 crores, the implications are huge for both of you, and it's not just restricted to one particular category.
Right. So one of the experience that I would like to share with the participants today, we have had 3 rounds of e-invoicing in introduction till now. Now, one of the things that has happened is when you issue an invoice, or rather you generate an invoice, and if we find that the invoice is incorrect for some reason or the other, we could cancel that invoice in our system earlier, because much before the filing of the Gstr 1. But the big change which is happening after e-invoicing is that if we send the invoice for getting a QR code and IRN, and after that we have to cancel that invoice, we just cannot cancel the invoice in our system and not do anything on the GST portal side. So the requirement there would be to issue a credit note to cancel the invoice, which, because that in IRN that we have got generated for the invoice that was incorrect for some reason, would need to be officially cancelled through a credit note, and that credit note would also fetch a IRN and a QR code from the government portal. So this is, I think, again, a very important process change that one has to adopt going forward. And this has been an experience which we have seen for many of our clients in terms of when, especially those situations where invoices are issued from the factory or distant locations where invoices need to be cancelled for some reason or the other. So moving ahead, let us look at, Shrenik, we talked about the aspect of how we can adopt or comply with the invoicing, and we also spoke about the government tool that we have, and we could also look at to make use of a GSP or ASP GSP, as we say in common parlance. So from a usability perspective, from a perspective of making maybe a platform which can be used on a consistent basis, can you share some experiences with the participants today about what one should be looking forward in terms of the solution that one can use for doing the invoicing piece?
Right. So when it comes to a choice of solution, you know that there are various choices available in the market, and each one has got their own USP. But what we've done is that based on our experience, we've collated a set of features which one would ideally want to look at when they join the e-invoicing compliance mechanism. And while there are too many on the screen, I'd just like to highlight a few which are quite relevant and important. Number one, the onboarding should be fairly quick, because we are about 15 days away, 16 days away from the date, which is the 1st of April. So a solution having a quick onboarding and a mechanism where you can quickly join and easily configure yourself on the solution for generation of any invoice, that's something which should be a priority number one. And based on our past experience for past 3 rounds or 3 phases of invoicing, what we notice is that the government will probably not agree for an extension, and the date of 1st April is likely to continue. Number two, what is also more important is that there has to be a choice of integration available, because for this category of taxpayer of 20 to 50 crores, as I mentioned earlier, the IT preparedness is going to be a big challenge. Now, having said that, if you have a legacy solution which is being used for carrying out compliances, there are going to be challenges to generate the data fields in a particular manner, which is required by the government. So that's why a solution which helps you to kind of carry out the e-invoicing on a seamless basis by doing a real-time interchange between your system, data interchange between your system and the solution, is something which is of very importance. And that's why a solution which offers you flexibility of connecting through APIs or through a folder-based mechanism, which is called SFTP, or a solution which offers you a mechanism to do a UI-based file upload and carrying out e-invoicing, is something which you should look at. At the same time, what's also more important is that this is a real-time reporting of transaction, and you would not want to report something to the government portal which is incorrect. Otherwise, the transaction will come back. You'll have to resend the transaction, and there are inherent challenges in the whole mechanism of correction. So that is why a solution which offers you a robust set of validation for carrying out e-invoicing is something which is, again, of very, very importance. Now, when I say robust set of validation, it means that the validation should be a replica of what the government uses for validation of your transaction when you send a transaction to the government portal for e-invoicing. At the same time, there should be a flexibility that you can have your own company position related validation also embedded. Right? Just to give you an example, let's say your company deals in a particular set of products which are taxable only at 18%. You may want to put a validation check in the solution to say that any transaction which is, let's say, 5% or 12% should not be allowed to be passed on to the government portal. So this will ensure that you reduce the number of errors which are being sent to the government portal and do a corrective action at your end. Lastly, it's also important that there is a data safety and security. So a solution which helps you to keep your data safe and secure, and at the same time do a real-time data interchange between the government portal is something which we would recommend to be looked into a solution. And finally, there's also a requirement that the data should be fed back into your system, because once the government portal shares a QR code or the IRN, you'll have to put them or embed them on the invoice that you share with your customer. So solution offering a reverse feed of these data onto your ERP or a billing system is something which is definitely a plus point for you to select that solution. So this is what we recommend based on our experience in dealing with various solutions available in the market.
Okay. So having looked at what kind of a solution could help us comply with this need, the e-invoicing compliance, the other aspect which is very important, as we touched upon in the previous slide, is about large enterprises managing their distribution chain or supply chain, where their supply chain partners are now required to comply with the invoicing because of the lowering of the threshold. Now, in this case, there could be a uniform platform which all these channel partners could be using for complying with this new requirement, because that gives them a uniform kind of a basis of this important change. And we have had our experiences in this kind of setup. So what I would request Shrenik now is to take us through that what are the key aspects for a large enterprise when they have a host of channel partners who are required to do e-invoicing, and now with the decrease in the threshold, there is a possibility of a good amount of channel partners again coming within the ambit of e-invoicing. Shrenik, why don't you take us through that experience once more?
Absolutely, this is a very important slide for all the attendees. And while it looks busy, I'll try to explain to you in a simpler term. So just imagine a situation that all your transactions reside on a single set of data. That's what this solution can do. Now, what it means is that you have the entire ecosystem of your vendors, distributors, dealers on the same e-invoicing platform. How this will help is that you have a unified flow of data. The unified set of validations apply on the same set of data, and all the data of your entire ecosystem, whether it is your purchase or your sales, remain on the same platform, and it is available as and when you need it. So essentially, the flow that it works is that you have your dealers or distributors or vendors connected to a central server or your dealer management system or a vendor management system, from where the details of transactions required to qualify for e-invoicing are sent to an e-invoicing solution. Now, here a standard set of validations will apply in the e-invoicing solution. And as I mentioned earlier, this can also be customized to your business specific requirements. So once the validation happens, the data goes into the government portal for generation of e-invoice. And thereafter, the IRN and the write back happens on the data, and then your billing platform ingests or takes that data for the purpose of generation of an invoice. In parallel, a set of transactions, a copy of the transaction or e-invoice is also sent to your distributors as well as your vendors. So now this means that there's one happy family on the same platform carrying out e-invoicing on a real-time basis with the use of an advanced technology. You may probably be thinking that what's beneficial or what's advantageous in this. Now, just imagine that you as a tax head or a tax manager or a supply chain manager will want to see how the whole ecosystem is doing so far as not just e-invoicing is concerned, but also their pricing, their billing, etc. So this gives you a real-time view and visibility about what your entire ecosystem is doing, how the invoices are generated by various stakeholders or various parties using the same platform. You have a dashboard available where you can verify how many invoices have been generated, what's the pricing adopted by your dealers or distributors, right? Because being a supply chain manager or a head, one would want to see that the pricing is controlled in the market. You have a visibility as to how the customers are getting the pricing or invoicing done in their name. So this brings in the whole visibility as well as a tighter control in the whole supply chain for you. At the same time, it's a cost-efficient solution. So let's imagine you have various distributors, dealers, and vendors. If they go individually for their own solution, it's going to be a very costly affair for them. But if you have everybody on the same platform, it's going to be cost-efficient for you as well as for your ecosystem partners. They'll be happy to have something arranged by you for them, and have a better efficiency so far as their operation costs are concerned. And at the same time, being a larger enterprise, you will be concerned and worried about your input tax credit. So once your vendors are on the same platform, you can have a real-time view of your vendors issuing invoices in your name. You can also have a real-time view of your input tax credit and do a better planning in terms of your ITC utilization as well as eligibility or ineligibility of those ITC. At the same time, it's also visible to you as to what all invoices are eligible, what all invoices are not eligible, whether the vendor has filed those invoices in their returns or not. And then you can do flagging of all those invoices to take a defined or concerned position so far as ITC is concerned. So end in end, it's something which is a fairly tried and tested model. So many large companies use this kind of mechanism to have the whole ecosystem on the same platform. And there are efficiencies and the benefits are quite clearly seen in our experience. Amit?
Right. Thanks, Shrenik. And I think the key point that we need to keep in mind is the aspect of compliance can devolve on a large enterprise if the channel partners they have challenges in terms of adopting e-invoicing right from day one. And therefore, the importance of embracing a platform which would be easily accessible by all channel partners, whether vendors or distributors, and also at the same time, give the confidence and comfort to the large enterprises about the channel partners' compliance status is a key point over here to be kept in mind. Now, moving forward, I think we have come almost to the end of this presentation from our side. One important aspect that we wanted to cover as part of this session is to the changing landscape of vendor management and ITC management, because with e-invoicing coming in and with the restrictions proposed on the input tax credit provisions in the Union Budget of 2022, there is a very good possibility that e-invoicing again will play a large role or a big role in terms of having an impact on the ITC process overall. So what we would like to do in this slide, take you through the areas where input tax management and vendor management are going to be a very key aspect of the overall GST compliance, and how we could possibly use technology to track those compliances so that we are able to minimize our input tax losses, if any, and also also have the comfort of dealing with compliant vendors and channel partners. So with that, Shrenik, can you take this up for the panel, for the participants, please?
Sure, thanks. So what we've done is we've tried to capture the whole process from the procurement till the payment to the vendors, and then give highlights as to what all things need to be taken care of at each stage. And essentially, this will ensure that you have your input tax credit on a very healthy note, and at the same time comply with the necessary requirements which are under the GST law. So if we start with the vendor master first. Now, what vendor master means is that you have all the details of your vendors in a particular master form. Now, this is relevant and important because based on the details available in the vendor master, you will determine whether the payment is required to be made and how much is the payment which is required to be made to the vendors. With e-invoicing coming in, the government has made various data points available to the taxpayers, and these are not something which is I mean, you can easily access those data points by logging into GST portal. So what we recommend to our clients is that you use these parameters and the data available in the public domain to do some sort of a vendor rating. Now, this vendor rating will help you to determine whether the vendors are compliant with e-invoicing and overall GST compliance requirements or not. If they are not, then you can decide to take a different treatment or different position so far as their invoices are concerned. For example, if a vendor is not compliant with e-invoicing, and then what you get as an invoice from them is a plain piece of paper without any QR code, then it has to undergo different treatment so far as the payments are concerned. Same way, it's also important that the existing vendors that you have, you carry out a health check to ensure that they are compliant on a recurring or a regular basis, and there are no defaults which are conducted by them. This also involves you checking that how much of the tax credit is used by these vendors for payment of GST, because naturally, If a higher amount of input tax credit is used for making payment of GST, that means that there could be a higher chance of the failure of the vendor because cash payment is on a minimal basis. There are various parameters which the government has prescribed, and these are available in the public domain on the GST portal for you to check that the vendor is healthy and it is not going to impact your supply chain or disrupt your supply chain going forward. So this is so far as a vendor master data and vendor health is concerned. When it comes to transaction level verification, what's important is to check that the invoice that you get for your purchases is a valid invoice. It reconciles with your purchase register, and then you are eligible for claiming input tax credit. There are various parameters which are prescribed by the government to ensure that you match those details. And now with GSTR 2 becoming mandatory for claiming your input tax credit, this whole exercise becomes very, very important. So now essentially what you need to do is that you need to validate and verify whether the invoice issued by the customer is an e-invoice. Does it have a QR code which is issued by the government as a part of the invoicing exercise? Do these transactions match with your purchase register, or are there any mismatches? Because again, if there's any mismatch because a vendor has misreported a transaction, it could have an impact on your input tax credit. At the same time, there are various criteria of eligibility. Some of them are prescribed in section 17 of the GST law, and many of these criteria are going to be embedded as part of GSTR 2B form going forward. So what one needs to ensure is that the particular invoice on which you're taking the credit doesn't fall into the non-eligibility category. This is very important because if an input tax credit is taken on an invoice which is not eligible otherwise, there could be consequential interest and penalty on your organization, right? And finally, at the same time, it may so happen that a vendor may be issuing invoices which are generally compliant, but there could be invoices which are generally non-compliant. So a vendor level reconciliation and a vendor level check will also help you to assign a risk rating to the vendors and also carry out a robust reconciliation based on which you can determine whether to make payment to the vendor or not for the consideration as well as the GST component. So once you do all this reconciliation, the next step naturally is accounting of the invoices and reporting those invoices into your returns. So based on the exercise carried out, you get a flagging, you get a risk rating, and then you carry out your own evaluation based on this rating and determine whether to record that invoice or not and whether to take input tax credit or not. If there's any non-compliant invoice, we probably may need to reverse the input tax credit because it could be disputed by the tax authorities in future otherwise. So we thought we'll just put all these parameters on a slide for you to have a reference to. And this is going to be very, very important going forward once the government implements the whole invoicing mechanism for a large number of taxpayers going forward. Amit?
Yeah. So thanks, Shrenik, for that comprehensive explanation. I think the key aspects that we need to summarize from this is with e-invoicing being rolled out to, I would say, about 80 to 85% of the top bracket of taxpayers in GST. And compliance management is one aspect which is going to have a paradigm shift, right? And also the fact that government has had the experience of implementing e-invoicing for the larger taxpayers. It has given the results which the government wanted to derive out of this initiative. So, and with the restrictions coming in for the input tax availment process, e-invoicing is going to play a key part there. And therefore, we thought that we should discuss this comprehensively with the participants on this call, so that it is not viewed, that e-invoicing is not viewed only as an isolated event. It is a comprehensive event or a composite event for all taxpayers and impacts the entire ecosystem of GST compliances. Now, with that, we come to the end of our presentation, but we are happy to take questions from the participants. You can, Mr. Roy, if you want to summarize the presentation in your own way, and then we could hear the participants with their questions also.
We would request the participants to pose their questions in the Q&A box.
Well, the summary of the presentation from my take in one sentence is something which, when GST was introduced, I had mentioned in whichever panels I addressed, and many others had mentioned, including Shrenik, Prashant Deshpande, my old friend, is that e-invoicing or anything in GST should not be viewed as just a tax or a compliance requirement. Uh, it is to be treated as a business process change kind of a requirement, because it will have touch points with many functions throughout the enterprise outside of tax, for primarily supply chain, procurement, marketing, when you're doing outward supplies, legal, and everything. So that those touch points, I think, have only increased with e-invoicing, and the participants may take note of that and ask the questions accordingly. Because there is perhaps nobody more equipped than Deloitte and this panel of Shrenik and Amit Sarkar to answer questions which are straddling across various areas apart from just core tax.
There are two questions in the, three questions probably in the Q&A box.
So I think, let me take the first question.
Yeah.
It says how much real-time uploading is expected. Should it be instant, or do we have some time to comply with it? It is actually going to be real-time, because you can't wait for, say, for instance, you have to dispatch goods to some customer. You have to have the QR code and IRN on your invoice before dispatching and putting the invoice along with the transporter. So it has to be real-time. There's no lead time or even I would say a time that you have to comply with this requirement. So it's going to be real-time for that matter. Shrenik, can you take up the next question, please?
Yeah, sure. The next question is, can we do e-invoicing voluntarily through though our turnover has never exceeded 20 crores? This is by Praveen Kumar Agarwal. Unfortunately, Praveen, the government does not allow voluntary invoicing as yet. So you'll have to wait for your turn to come to be enabled for e-invoicing when they further lower the threshold.
So next question from Mr. Sanjay Pathak is, in export case, which invoice need to e-invoice? Custom invoice in foreign currency or GST export invoice in INR? Okay, so this is, I don't think you need to raise two separate invoices, right? You can raise one single invoice, and that invoice needs to be a GST export invoice. And as Shrenik mentioned at the outset, that the documents which are expected to undergo the e-invoicing requirement includes export invoices also. So we will have to have the export invoices with the QRN and IR code for your exports as well. The next question from Mr. Dhirendra Singh. Suppose books gets closed on the last day of the month and the invoice raised on the first day of the next month with last date of the previous month. For example, 28th February dated invoice raised on 1st of March. Then will it be allowed on 1st of March to upload the invoice? Shrenik, would you want to answer that technically from an e-invoicing process standpoint?
Yeah, if you raise an invoice on 1st of March with dated 28th February, the government portal will allow you to raise an invoice with 28th February. That's feasible.
Okay, the next question is from Mr. Praveen Agarwal again. From March 22 invoices, we raise invoices in April as we get the full data on only on 1st of April. How can we do this backdated on e-invoicing? So I think similar to the previous question, Shrenik, but I think there is a larger play on the time of supply that we are also going to talk about here. So can you take this, please?
Yeah, sure. So far as your time of supply is maintained, you can raise March 22 invoices in April. But this will typically be applicable in case of services, right? Because in case of goods, once you have to transport the goods, let's say on 31st of March, you'll have to raise an invoice, and you'll also have to raise an e-way bill for the transportation of goods. But this typically could apply in case of services, where you can raise an invoice subsequently and then have an e-invoice generated for the date of March in April.
In other words, Shrenik, what we are saying is that for goods, it has to be real time, right? And if we are for services, if we are raising invoices for the previous month in the next month, and that also complies with the time of supply provisions, we could possibly raise the invoices. Ideally, it should be in the current date, but if we have to issue an invoice for the previous or backdated, complying with the other provisions of GST law, this could be possible. Is that Is that what you are saying?
That's right.
Right. Okay, the next question from Mr. Abhishek Chajer is QR code required for invoices while in transit? As we said, that QR code and IRN are the two elements that we need to get imprinted on our invoices, on our tax invoices, to make them valid tax invoices, right? So if we have a goods consignment moving in from place A to place B, we will need to have the IRN and QR code from the government system and print it on the invoice. Otherwise, if the consignment gets intercepted by the tax authorities without the QR code and IRN, we could be inviting trouble for ourselves. The next question from Mr. Sanjay Balikar: nil-rated need to raise e-invoicing or not? Like if we have been agricultural product? Okay. So, Shrenik, can you take that question?
So e-invoicing does not apply in case of exempt supply. So if you're dealing in agriculture products which are exempt from GST, you do not need to comply with e-invoicing. Having said that, if you're supplying this agricultural product along with some other taxable products in the same invoice, you will have to comply with e-invoicing for the common invoice that you issue.
Okay. The next question from again Mr. Sanjay Balikar: for e-invoicing, for invoice cancelled, we need to raise credit note only, or we can cancel that e-invoice? According to the process, Mr. Balikar, we can't just cancel the invoice. We have to have a corresponding document in the form of a credit note to go and cancel the invoice. And Shrenik, is there a protocol which has also come out from the IRP on this?
Right. So the government portal allows you to cancel invoices only within 24 hours of its generation. Once the 24 hours pass, the only way for you to negate the transaction is by way of issuance of a credit note, and that the credit note again has to go through the e-invoicing mechanism.
Right. Next question from Mr. Kushagra Bansal: is there any API available to check e-invoice applicability on our vendors based on their GSTNs? Yes, of course. And Shrenik, I think you can take up that.
Yeah, so the government portal, the NIC portal, allows you to check whether the vendors are eligible for e-invoicing or not. There are no APIs available because NIC, there are two ways which NIC is enabled. One is that you check on the portal. Second is that they issue, periodically they issue or publish a list of GSTs which are issuing e-invoices. What many companies are doing is that they have an automated mechanism of checking the e-invoice eligibility by adopting a RPA or a bot-based mechanism.
So there are solutions which may not be coming from the government side, but I think there are some solutions to track the applicability of GST for your vendors or any other channel partners through the use of bot and stuff like that. So next question from Mr. Sanjay Pathak: is e-invoice applicable for high C sales? Mr. Pathak, high C sales are non-taxable supplies as far as GST law is concerned, and therefore you are not required to issue a tax invoice for those supplies. Therefore, e-invoice would not be required because e-invoice is required only for taxable supplies, including exports. Next question from Mr. Dhirendra Singh: in case of service industry, what is the feasibility of days for making e-invoice? So if your question is whether you can have pre-scheduled dates for doing e-invoicing, it completely depends on your business. For instance, if you have, we have seen companies who have an invoicing schedule on a fortnightly basis. That is something which is a business requirement and not mandated by the government. And therefore, if you have a requirement, if you have a business need of having a fortnightly invoicing system or a monthly invoicing system, the invoicing would also have to be aligned with that invoicing methodology. But the moot point is, before issuing the invoice to your customer, if you are already covered in the e-invoicing requirement, you need to have the IRN and QR code on your invoices whenever you issue the invoices before they go out to your customer. And that's the important point that we should keep in mind. Next question is about e-invoice. Mr. Harsh Bora has written: is e-invoice applicable for export without payment of tax transaction? I think we answered this question, but Shrenik, can you again explain that with illustration, please?
Yeah, so e-invoicing applies for export transactions, and there's no distinction whether you make it without payment of tax or with payment of tax. You'll have to comply with e-invoicing for this.
So in other words, it does not matter whether we are opting for the LUT option or the with payment option. If it's an export invoice, we have to take a IRN and a QR code for that. So we are already on the top of the hour, and if there are any follow-up questions, happy to take one or two more. But I would like to give it back to Mr. Shobik Roy and Mr. Ganesh to wrap up the session, please.
Mr. Roy.
I wish to thank profusely Deloitte, Shrenik, and Amit for giving us very, very useful and insights into the requirements of e-invoicing. And I think all the participants too found it equally useful, judging from the number of questions that were raised. And of course, thanks to Bombay Chamber for organizing the webinar itself and giving us this platform to the many taxpayers to clear their doubts through the Deloitte experts, Shrenik and Amit. And I think if I'm taking the liberty to say that probably they can take their queries offline also. Maybe give it to Bombay Chamber, and they in turn will send to the concerned person. And with that, and thanking again the panelists and all the participants and Bombay Chambers, I think we can conclude this webinar.
Thank you, Mr. Roy, and thank you, Bombay Chamber of Commerce,